signals of any kind. These are different ways that you can utilize the TrendSpider platform to help your analysis be more efficient and also a little more unique to something that you've never tried before, especially with the anchored VWAP and the ability to create these different sensitivity alerts on them, which we'll go over different examples of that as well. So for those who have not heard about TrendSpider before, quickly, just a little synopsis of who we are. We've been around now for about 18 months to the general public as far as releasing our product to the market. And we've been working on our back-end code for about 3 years now. So the whole point of our company and our software is to innovate and to create new ways to look at things in technical analysis that really haven't been touched on in years or even decades. So this is not only for professionals, but also retail traders as well. We really want to get everybody on the same playing field and provide some of the technology some of the bigger firms use and apply that to the retail setting. Some of these problems that retail traders face and that we're aiming to solve are bias and curve fitting. So it's very easy to become very into a position and all of a sudden you're creating a chart based on your bias kind of drawing out the chart or drawing your levels rather than having really consistency and basic kind of a system you're following drawing these levels. So we're really trying to remove inconsistencies in your analysis, keeping things efficient and really helping you not have to stare at the computer all day. And there's a number of ways that you can do that through our alert system, through our automated trend lines, such as the ability to just turn on your preferences, have the system draw these things for you, and all of a sudden you've got a chart where you didn't necessarily have to go through 1,000 different lines to see which one worked best. We try to keep things consistent, let math do all the work, and really at the end of the day, when you remove emotion in trading, you tend to do much better. So with further ado, I'm going to hand it off to Brian. He is really going to be touching on our main function of the proprietary indicators from our industry leaders, which is a big part and becoming a bigger part of our platform. And Brian's going to be talking about how he anchors the VWAP, what anchored VWAP even means, and essentially how he uses it in everyday technical analysis and trading. Thank you so much, Brian, and I'm going to hand it off to you.
All right, Jake, thanks for the introduction. Let me get my screen shared, and then we will go ahead and get started. Can you now see my screen? Anyone want to let me know?
I will in a second. I don't see it yet, but I'm thinking it's going to be popping up here in a second.
That's why Chrome tab. Okay, share.
And we are good.
Okay, cool. Well, so good afternoon and welcome everybody. My name is Brian Shannon. I am the founder of alphatrends.net. You might have seen me online at alphatrends on Twitter. I've written the book Technical Analysis Using Multiple Timeframes. I encourage you to take a look at that if you haven't. But we're here today to talk about the anchored volume weighted average price. Very simply, it is what I believe is the perfect combination of price, volume, and time, which are the key components when it comes to trading. Price, it's how we keep score. I've trademarked the phrase only price pays because at the end of the day, that's what matters. We can look at 1,000 different oscillators and indicators, and you could even, and maybe you'll find the anchored volume weighted average price isn't even something of interest for you. But because at the end of the day, price is the only thing that matters. How you get to that decision making is up to you. For me, I think though that volume is a super important study, and because it gives us the intensity of the participants at what level are they participating at, and then time, of course, is a subjective study. What we're looking at in terms of anchoring a volume weighted average price. Let me just touch on that for a moment. If you think about moving averages, so the volume weighted average price is represented as a moving average. Most people are familiar with a simple moving average. You say you're looking at a 10-day moving average. We simply take the last 10 days, add up the price that it closed at, divide it by 10. That is one period of that moving average. The next day, the old day 10 drops off and is replaced with the new day 1, and it moves forward from there. I'm not going to give the whole basics on that, but the anchored volume weighted average price allows us to measure the volume and price from a specific time and point. It is the total dollar amount, the true dollar cost average is one way to look at it. So, if you dollar cost average into your 401k or whatever, your IRA, you're looking at your volume weighted average price is the price that you paid for that over each of the last 12 months. If you paid $20 one month, $30 one month, $32, each month you're buying $500, $500 worth, let's say, you're going to have an odd number of shares each month. Your tax basis, your cost basis is your volume weighted average price. So we'll look at some examples. Let me just switch over actually to the to TrendSpider before we go too deeply into some of the other educational stuff there. Let me go to how do I switch the screen? I think I'll disable it, enable, and then
if you do the TrendSpider tab, I think you'll be able to pick
yeah, so there we go. So here is the S&P 500 on the daily chart. If you've been looking at my, trading at all that I've, the analysis that I do, I talk a lot about the volume weighted average price. So what we want to look at is what's the average price from an event. The reason we want to know that is because that becomes our reference point where, from the December low, we can say that is an important event because we had a lot of volume and volatility in there and we have a turning point. So we simply take our cursor, right click on it, and then go up, left click on create Alpha Trends anchored volume weighted average price here. So there it is. What this does is from that point forward, so on the first day, it will tell you the average price for one day, then the volume weighted average price for the last 2 days. So it's a cumulative study. And what you see here is that, from the December low, the price was tested right here, the volume weighted average price, and then once again, right over in this area. So it tends to be a level that does act as kind of a hidden support or resistance area. It was the volume weighted average price itself was initially it was initially created as a benchmark for execution, and this was in 1998. In 1998, an academic study was done about how can we create, get the best execution. If a mutual fund wants to buy 500,000 shares, he's kind of, looks at the price, during the day and says, where do I own this stock? There wasn't a true benchmark, but with the volume weighted average price, what we came up with is that you can come up with this on any time frame. By the way, it's not just for day trades. So if you take a look at the volume weighted average price from the beginning of the day on Friday, we just go to 9:30 and create it right there, and there you go. So there's our, what did I do? I ended indicators. There we go. So that is the volume weighted average price. So for that day from 9:30 on, you can see it initially held as support, then it crossed back and forth, resistance, and then, just kind of a choppy session. What we want to use it for, and even if you're a day trader, if you're really a micro scalper, you can look at the market and say, well, that was a big volume event. We can draw it from that point forward. And let's say you're going to buy the stock, as it gets back above the daily volume weighted average price, the SPY right here at 98.25, let's say. Well, then you can put your stop, underneath the volume weighted average price from the event that got the buyers back in control. You'd be out at 98.40. Not a huge trade, but still, the point is, it gives us from that point forward what has the average participant exchange, what level has the price exchange hands at, and that is a truly objective measurement from that point in time. So we can go on to a 15-minute time frame and say, well, let's look at the volume weighted average price from this, from this gap up. So there we can create it, and you can see it held as support on this day. And then we had more gaps. So, we had a gap right here. The point is we can do it, and what it's telling us is the psychology from that event. So on this day where the market gaps up, and it actually holds as resistance and then support later on in the day. So what we're looking at is a mathematical price average. And the reason that that is important is because it is our, if you think about, let's just go back to the screen for a moment, to the other screen that is. And what I want to share with you here is the, what the volume weighted average price is based upon. If you're familiar with Daniel Kahneman, created or came up with the anchoring bias. He's actually a psychiatrist who won a Nobel Prize in economics for his work, and a lot of it was to do with anchoring. Basically, if you go into a store and you see a TV and it says it's $3,000. That's your point of reference for what this TV is worth. Your reference point for a stock is what did you pay? I pay, that's how you measure your success. If you bought the stock at $20 a share, it goes down to 18, 17, 16. You're measuring against your anchor. You're anchored to that $20 level. And that's important for you, but it's not important for everyone else. So like traditional, technical analysis, that we're trying to measure supply and demand, what we want to know is what is the average participant looking at? Where do we look at the price action and say the buyers are in control or the sellers are in control? So what we want to look at is just a couple of very simple things. One is the direction of the volume weighted average price for the time frame that we're looking at. If it's sloped positively, well, then that means money's coming into that market. If it's declining, money's flowing out from the anchor point. Flat to neutral, then it's, kind of back and forth. And I think it's best for me to probably slow down and go in and take a look at some actual examples, show you some examples on the screen of where we can look at it. And I actually, I don't see how I can look. So let me see. Someone says, I don't have that indicator available. It's available on everyone's TrendSpider. If you right click on the chart, it is available. Most effective time frame, any time frame, and we'll go through that. Does it include dark pool activity? It does not. Okay, let me go over to TrendSpider now then. So what we're looking at again is, so the SPY. Let's go back to the daily time frame. And what we're saying is, back in December, we had this event that then we measure forward from. Now, I kind of thought we were going to come back down and test that before we saw this breakout here, but we didn't. So, it's not to me something that it's more of it's an indicator. It's not a signal to buy or sell. Now, sometimes, as with any indicator, it'll hit perfectly upon it, but you don't want to, I don't look at it and say, well, it's at that VWAP, I have to buy, similar to, let's say, a 50-day moving average. I'm sure, a lot of people that were, they're listening right now, look at the 50-day moving average or the 200-day moving average. And you have to ask, why the 50-day moving average? The 50-day moving average is simply the average of the last 50 days. What is significant about that? What's significant about 10 weeks? And I will say that there's absolutely nothing significant. Instead, what we should be looking at is a 13-week or 65-day moving average, because that's how many weeks are in a quarter. That's, that seems more significant. So, what we want to do is say from, significant turning points. So where to anchor from, let me just kind of turn back around a little bit. It was originally meant as an execution tool. I started using it back in 2006. I kind of stumbled into it on an old trading platform. It was more of a trend line. It wasn't represented as a moving average, but I used it in 2006 as an analysis tool, and I started seeing, hey, there's hidden support and resistance at these levels. So we can take a look at, if you've been looking at my Twitter account, you'll see that I've been talking about beyond meat, and that one great place to start an anchor from is the volume weighted average price from an IPO. So when Beyond Meat came public right here, we saw that it was increasing. Over here as it dropped down, I mentioned a tweet, it looks like it's going to test the volume weighted average price from the event, that is from the IPO. Then it came up to the next significant volume weighted average price was from this gap right here, most likely earnings, I don't remember, but it came up there and found resistance almost to the penny. Not to the penny, but within a couple dollars there. And when it came up there, I tweeted last week, it looks like it's headed for another test of the volume weighted average price from the IPO. So it looks like it's headed back down there to me. And we can look at it and say, this little low right here, let me just move that over so I can see the date. So the 15th or 16th, we can go then to a 2-hour chart, and we can look at this low, and we can create a new volume weighted average price there. And look where we stopped on Friday, right at that level. So the volume weighted average price from the last test of the volume weighted average price from the IPO, if that makes sense. I'll say that again. So here I just drawn it in. So that's the last time we tested the volume weighted average price from the IPO, and you can see that we're right on it. Now, one thing you'll notice is it doesn't exactly show up in the same spot on a daily as it does on an hourly time frame, and that's simply due to price sensitivity in terms of the law of large numbers. How many input pieces are there? So if we're looking at 50 pieces of data versus 5 pieces of data, on the daily chart, that is, you're going to have less pieces of information to average into, so it's not going to be as sensitive or accurate. That's not a drawback. A lot of people will say, well, it's not the actual true price. And I'll say it doesn't matter. It's, you're in the right neighborhood, you're in the right zone. It's a level of interest, so that maybe if you shorted it up in here, you're going to look at it and say, okay, maybe I should be covering some of it because it's finding buyers at that last volume weighted average price. It's not, again, an action point. It's a level of interest to say, okay, let's start getting interested on shorter term timeframes and look for actual evidence that the buyers may or may not be getting involved in here. And so Caesar is just saying that dark pools are required to report their volume 24 hours after. So I don't know if that then does get included. That would be, something maybe Dan or Jake could answer.
I think Dan will address that one. Yeah, he's writing something now.
Or at least can find out and get back to you on that. Then that's what Dan's saying, is he'll have to get back to that. But again, the point is, and a lot of people will criticize and say, well, it doesn't include dark pool activity. But neither do a lot of the algorithms that, it's dark, no one can see it. So the algorithms that run volume weighted average price models, they don't see that dark pool activity either, but you can see their actions on the chart showing up. So it really is not an important thing, I don't think. It gives us the best representation of all the data available at the time we're making a decision, and that's what we need to be focused on. We can't worry about things that we can't see or don't know. It's we deal with prices and facts right in front of us to make our decisions, and part of that decision making, of course, is a risk reward scenario. Is the potential for reward worth the perceived risk that I'm taking here? And you set your stop, or you have your mental stop, you set your alert, or do whatever you do to manage risk. and there's no perfection in trading. No one's going to know how the shorts are being affected. No one's going to know what the options activity is, how the convertible bonds are playing into overall picture. So no one ever has a complete accurate picture of all the activity around a stock like Beyond or Tesla or whatever. Brian is asking me, if you were to use another indicator along with volume weighted average price, what would it be? I use price, volume, multiple time frames, and I do like simple moving averages reference points. So I don't, they're not showing on here right now because I wanted to keep this simple for for the talk that we're having. But if we look at those simple things, and that's what I use because that's what's comfortable for me after using charts for the last since 1991. That I encourage everyone that there's no magic indicator or oscillator. To me, the volume weighted average price, the anchored VWAP, does show me the absolute best representation of supply and demand from a point in time. It is fact. It's not time based in that it's, hey, well, the 10-day moving average, there's no settings on the anchored VWAP. All you do is set where the anchor is. And that becomes a little bit of an art. The science of it is, we know the average price paid since a point in time. The art is knowing where to anchor from, and then seeing if the market actually confirms, as it did in here on Beyond, that it is a significant level to be aware of, and that we should, in this area, look at a shorter term time frame. We should look at a shorter term time frame and come up with our risk reward for a short side trade in there. Another example, let's take a look at, I know Jake was talking about Google, and I've been looking at Google on a volume weighted average price basis as well. Here's our daily chart. And, one thing you could look at here is you could say, well, is that a big cup and handle there? I know a lot of people like to look at that. I look at it and say, what are the significant events? Well, this peak right here was a significant event. So it gapped down, it found resistance at that, it found supply at that volume weighted average price, and then it came up through there and held as support. So now we have a new significant event. We can say this is the low. So what this represents is the average price from this point was declining and being sold into on the bounces. Here, though, it found support. So it told us the average price paid was now lower than what the average price actually is, meaning the average long is in a winning position in this area. The average short is losing in that area. So we can say, well, this is the most significant low from there. And then you can see that low anchored was defended once. It didn't come back down to it yet. And then what did we see? We saw that we had a big gap up. So from that event, do you chase that gap or do you wait? So if you wait and say, okay, that volume weighted average price is still declining. Now it's flattened out and price is above it. That tells me buyers are back in control. They're in control from this peak, from this low, and from this peak. The average participant who chased from here and averaged into it, well, we saw that this volume weighted average price was defended here, here, and here. And now from this point, what we'll do is we'll take a look at that. So that was maybe 20, 30 days ago. So we'll go down to about a 4-hour chart to zoom in on that. Let's go down to 2 hours. And there we can see it better. So you can see that we saw sellers. Now what I'm thinking is that as long as we can hold above this, that tells me that it's being defended. Maybe it dips down slightly through as it did right here, or it dipped up through there, but now it's flat to advancing. So I think that a break above this high right here, 1214 and change, tells me the buyers are clearly in control. And I might even, for a stop, say I want to put my set an alert from I'll let Jake go into those, the sensitivity and the alerts, but I could set a volume weighted average price from here, and maybe my stop will go at 1180-ish. So it's about trying to understand who's in control from a point in time so that I can find the lowest risk, highest probability trade. So to me, it's high probability that if it breaks this peak right here, you could even probably buy it in here. To me, a worst case stop would go underneath this low right here because that's also the volume weighted average price from the prior peak. We'll go back to the daily. And to me, a worst case stop is under there, down at about 1135, let's say. So would you risk 65, 70 points for the potential in here of much bigger upside that Google can maybe go on to new all-time highs, which it looks like it's headed for to me, because no matter where you set the anchor from, the average participant from those points is in a winning position, telling us that the buyers are in control. The path of least resistance is higher. Money is flowing into this stock. This is, the type of stock we want to be owning. And then it's about where do we manage our, how do we manage our risk from a swing trade perspective? Again, maybe your stop goes at 1180. Maybe your stop is down 1140. It's up to you to decide that. I never tell anyone what to do. I point out opportunities and say, here's how I'm looking at a stock, but my time frame might be much shorter. Maybe I'm going to buy some call options out 2 weeks. Maybe I'm going to buy call options out 3 months, or maybe I'm going to do a spread. There's so many different ways to get involved in the market. Don't ever listen to anyone who tries to tell you what to do. The point of doing your own analysis is to make the trade your own. Does the trade make sense? I outline trades like this, every single day for subscribers to Alpha Trends, but it actually annoys me if people, try to follow it to the penny. The point isn't to tell people what to do, but to educate them so that they can understand the way that markets actually move and the way that money flows through them to determine who's in control. Am I chasing this stock up here? I mean, who buys on a gap up like that? That's foolish. And then trying to buy the pullback, I don't want to buy a pullback because I don't know where that pullback's going to stop. I might, sniff around as it tests these volume weighted average price levels. And you can see they were pretty much perfect the way they held once it turned from resistance to support once and started showing it in upslope. That's the volume weighted average price from the highest point that anyone has ever paid in this stock, meaning the average price at 11 or at 1200 is lower than where we are right now for from the highest point ever paid. If you look at Tesla, this is one I mentioned recently, that if you go back all the way to from the IPO, if you look at Tesla on the monthly, that's T, that's why, SLA, guess I got ahead of myself. But if we take a look and throw a volume weighted average price on there, well, look at, here we are now stuck below it and it's starting to decline. So then let's look at a weekly time frame. And there's that same, well, I guess it won't show because the data doesn't go back far enough on the monthly for that. But here on the daily time frame, since this event from this low right here, we're fighting that. So this is where I'm looking for the stock to fail in this area. I don't have a short position, but I'm looking at it as a potential short from a risk reward standpoint, that once this makes a lower low, maybe below 218, 215, somewhere in there, then I'll be looking for a short in Tesla, but not quite yet. So because the average price paid from the IPO is currently above where this stock is trading. So meaning that the average price is declining, that the average long is feeling pain. The dollar cost average buyer who buys $100 worth a month for the last 10 years is now actually losing money in Tesla, is the way you want to look at it. I've mentioned Sirius Software, Sirius Satellite, just recently, SIRI. And I didn't get this one perfectly. I just kind of stumbled into it last week for whatever reason. But if you look at a weekly chart, Sirius has been, we can take, here's a significant low. We can throw a VWAP off of that. It held above it. The volume weighted average price from the all-time high, you can see we're back above that now. And then from this event, from this gap, it's now holding that as support. So what that would tell me first is that, and here's the volume weighted average price from the most recent low, that a worst case stop to me would go underneath this level, about 585-ish, even just underneath the low it made this week. And then we go over to the daily time frame, get a little, drill in a little bit closer, and you can see that that volume weighted average price from this event was probably an earnings report or whatever, but it caused a sudden dramatic shift in the psychology of the stock because it came down on heavy volume and continued to turn negative. Now it's flat, it's to turning higher. We're finding buyers are defending that level. So if it gets back below that level, why would I want to own it? If I can't do at least as good as, the average since the buyers regained control, I don't want to be involved in the stock anymore. So I realize I'm throwing a whole bunch at you. I want to slow down a little bit and see if you guys have some questions. Or maybe it would be helpful if you could, tell me a stock that you're looking at, and then I could and the time frame, and I'll whether you're if you're a day trader, it's not going to be useful, but maybe for a swing trade or something longer, just let me know the time frame, and I'll show you how I would look at it.
So I think we just got a couple questions. I think you answered most of them, but maybe the Chuck asks, without getting too technical, can you give us a sense of what is weighted more, volume or price extreme with this tool?
It is so the way it works is every single share gets the same vote. So if 10,000 shares trades at 200, it's $6 a share, and 10,000, and it'll get 10,000 votes. If 500 shares trades at 601, it gets 500 votes. Each share traded, it's the average price paid over a certain time. So it's not really a technical thing so much. It's really, and that's the beauty of it, is it's such a straightforward, easy to recognize concept. The first 100 shares of the day, that gets 100% of the weighting. The next 100 shares, now it's at 50% weighting. The next 100 shares is at 30% weighting. The next 100 shares is at 25% weighting. Then 500 shares trades. Well, at that price, that now gets, where are we? About 40%, I guess. Brian says, if you were to, I answered that one. Okay, so I guess I didn't use that. I see Chuck's. Hashim says, are you always using large spike as a reference point? Good question. So the art of where to anchor from is one of the biggest questions. In the way I look at it is, I've looked at it a little bit differently recently because of what Jake is doing with the blue candles, and I'll let him talk about that with the blue raindrops, that is. But I generally look at what is a significant event where it is an extreme high or low, or since a big volume in earnings report is often. So anytime there's a big gap, whether it's an earnings report, an FDA, whatever this the impetus was for that trade, for that move, then I want to know, is there residual activity based around that? And you'll see that oftentimes a stock will gap up on earnings and it'll pull back to the volume weighted average price from that earnings report over and over again. So Brian is saying, for a day / swing trade, how about MBOT? Okay, so let's look at MBOT. I've got two keyboards in front of me. I typed on the wrong one. Okay, so MBOT. Here is, one thing I would say first, understand the personality of the stock. I want to know what's the personality of this stock. This stock is what I would say is a complete piece of garbage that is getting a bounce. Um, it doesn't mean it can't be traded, but if you look at the weekly time frame, this thing's just a giant mess. It's done reverse splits over and over again. So I would say don't trust the stock. It has a big history of big spikes and then failures, and that's certainly true on this daily time frame as well. But this is a significant event. We can throw a VWAP on that. If this stock continues to squeeze higher, I would expect that this level near 9 would be where you'd want to look to either fade this thing or get out of your long. So we can go down now to so we've got that bigger level up there at, what did I say, 9.25-ish. If we go to let's go to a 1 hour chart, see what's going on here recently. So again, this is, this stock has a history of doing this big run up and then just fade. So what happened the last time? Well, it gapped up here. That was the beginning of this move, right? And this was on the 22nd. The buyers maintained control. There was a failed little breakdown there. They tried to get it higher again. And this is where the sellers took control when it made that lower low. And then it was lights out for the stock. Now we can look at this, and that's an hourly chart. What we'll go is over to we'll go to a 10-minute chart to look at Friday's activity. Here's our new anchoring point from a short-term perspective. And look at how the stock is holding along that volume weighted average price. There's no point trying to fade this stock or short it, I would think, until maybe it's below about 655. So if it breaks below 655, I would say, and this volume weighted average price starts to turn lower, stick with a short on it with whatever your stop parameters might be. Similar over here. If it continues to move higher, the level of interest to look for a potential turn would be up here. Let's say $9 to $9.25 per share would be where to look for that. I'm not going to answer Dimitri's unless he tells me his time frame, Dimitri. Just a daily, just a symbol doesn't mean anything to me because I don't know what you're looking for in terms of what you're okay. So swing trade for BJRI. Thank you. Almost went to the wrong keyboard again for some reason. BJRI. So here's another stock that, to me, it's guilty till proven innocent. It is in a downtrend. The sellers are in control. We can look at this weekly chart and go back to 2014, the lowest point on here, and we can say, the average participant from pretty much all these points is losing money. Money is flowing out of this stock. To me, it's just guilty till proven innocent on the weekly chart. Let's go over to a daily time frame. And now we can see, from that peak, money continues to flow out of this stock. Here was it looked like they tried to get it moving here. So I would put a volume weighted average price off of that. And look how it got defended over and over again. So if this thing does bounce, I would expect that about 41.5-ish is where it's going to find supply. I look at it as, again, it's another piece of garbage. It's a stock in a downtrend. It's broken. It's guilty till proven innocent. That it's more likely to continue lower than it is to reverse. That's just technical analysis 101. A trend once established is more likely to continue than reverse. If you're looking for a bounce, let's say above this level, maybe you get up to that 41 level, but your stop would have to go under here at 35-ish. So then you'd be looking at 4 points of upside for 2 points of downside. To me, it's not a good risk reward. And, I just call it the way I see it. I'm not looking at trying to make friends or enemies here. I just call them the way I see the stock setting up and what we've got. Can you use this today? Trade SPY? Yeah, of course you can. It's a tool. I think that I don't know what your background is, AG. I would say most people shouldn't be day trading just in general. The majority of people who do, do lose money. The more decisions you make, the more likely you're to make mistakes, and then your emotions get involved. Um, let's see, is VWAP a helpful indicator if a stock gaps up fairly regularly without filling those gaps? Roku on daily comes to mind. On a stock like that, yes, but on so for instance, if you're talking about an ADR, which gaps every day, then no. So let's take a look at, let's look at the hourly chart here on Roku. And because that's where, that's the time frame I have up. So from the beginning of this, this gap, you can see that the buyers have been defending that level. Well, now we might want to tighten up and say, well, how about since that time where that's not what I meant to do, cancel. How about, from that test, if I can say, if I can put a VWAP on the last time, now instead of having my stop way down here, I can have it at this point. And maybe you want to say, well, from this gap, where are the buyer, who's in control? How about from this level? Now we had a little bit of a shakeout, but that's, only a shakeout because the bigger trend is still higher. But we want to look at these levels and say, are they being defended? And if you got short in here, it was your indication that you were wrong and you should get out as it got back above that volume weighted average price, because it said, it looked like it was fading, but the buyers regained control. Get the hell out of there. Don't fight it. It's, you don't want to be the guy who's fighting. How about gold for a swing trade then? Let's take a look at gold. Gold's undergoing some profit taking. I think we all know that. So gold, first of all, for a swing trade, I think you always want to ask yourself, where has something come from? Where does it have the potential to go? We've just gone from 120 to 145, 146. The move began right here. So that's most likely going to be an important level to watch. Now, this is the most recent push higher. So we're right on that. That tells me that this is a level of interest. Now, it doesn't mean, to me, buy it right here, right now. It means let's look at a shorter term time frame and see if there's any indication the buyers are gaining control. Well, from the gap down 2 days ago, the sellers are back in control here. So it's still on a shorter term time frame undergoing some profit taking, but this is a level of interest. If you're the type of person who wants to buy right here, you could do so with maybe a stop down at about at 140 and a half. Because if this volume weighted average price fails, then I would expect it's highly likely to come down to about that 136 level where the volume weighted average price from the initial move began. Let's see. Brian Jake. Chuck asks, since you haven't authored a book that involves trading multiple time frames, do you have any different anchors over different time frames have any correlation or relationship? I'm not really sure I understand that question, but what I like to see is, for a swing trade, for instance, is I like to see some volume weighted average price levels come together. A stock that I have an eye on is Callaway. Now, Callaway, you look at this daily chart, it's not a whole lot to look at. But if we add a volume weighted average price off of the peak over here, you can see we're fighting and trying to hold that. So maybe let's back it up to a weekly time frame. So, that was a significant high. And the stock went sideways, trying to hold this level. After this big run, so we had a huge run up that we can argue began in this area. And I honestly, that's the first time I drew that. I didn't know it had significance in here. But, you start to play with these and you'll notice on different time frames that they line up to be really important levels. So this was the most recent relevant low. And we're back above that after a shakeout. So we saw a gap up. Again, you don't chase those gaps. So from that event, that price is declining and starting to turn sideways. If we look at a 1 hour chart and say, okay, from that event, now we're starting to flatten out. So I think if you get Callaway back above 1825, you could get involved with your stop probably at about 17.10 as a swing trade. So when they can kind of come together and give us that risk reward, then I start to look at that, multiple time frame relationship, Chuck. So Brian says, so as a starting strategy for this indicator, basically VWAP on significant highs, lows, gaps up, gaps down. Correct. Yes. And just, turning points, big volume events. It's at its core, it's a sentiment indicator, meaning it tells us, when you look at a chart, you have to say, how would I feel if I was long? How would I feel if I was short? How can I look at this objectively being in cash? Those are three choices. We can be long, we can be short, we can be in cash. If I'm long from up here, on Callaway, if I'm long from up here, I'm not feeling good. And it was a dopey buy to buy that big gap up anyways. How about from that peak? Well, I'm starting to feel a little bit better if I've been dollar averaging in. How's the average participant? Not one person, but the market has memory. The market looks at a price level, and that's why support broken tends to act as resistance. Resistance broken tends to act as support because there's horizontal price memory. Well, the most accurate memory is not a horizontal level, but what is the average price paid since that peak, and how about from that low, and how so from this peak, from that low, and from this peak, and they're all kind of congregating together. So the dumbest buyers, the dumbest shorts, they're starting to say we're at kind of an equilibrium point. And then we back it up to the longer term time frame and say, okay, we had a significant uptrend. We saw our stage 4 decline. We saw our stage 1 accumulation. Is this now in a stage 2 uptrend? What do I need for confirmation that we're in this stage 2 uptrend? To me, it is above these little highs here at about $18.25. We can see that with more clarity on this hourly time frame, because we can see the volume weighted average price has been declining and starting to flatten out. And we could throw one off on here if we want. I mean, you could throw these VWAPs anywhere you want, and you can make your chart look like a giant mess. But you can say, where are they congregated? Because that tells us where the most price memory is. And that's where we have the energy built for a potential directional break from that level. I think that I've answered all the questions. I don't see any that I missed. If I'm wrong, please let me know. Is it possible to use strategy tester on this? I'm going to let Jake answer that for you. Let me just interject real quickly. Dan's saying yes, and I think the issue, I think, is how do you I'll ask that in a different way, I guess, to Dan and Jake, which is, if you were to test a strategy here, you would need to test it from maybe some high standard deviation event. And is it possible to identify these big events or the big turning points within a trend? So maybe Jake, go from there.
So what you could do as far as back testing it, you could back test when price interacts with it. So let's say I want to back test anytime the price close has been above that anchor VWAP. So it'd be more of a function of what price is doing with it rather than just back testing, hey, this is where an anchored VWAP should be. It's more of saying, I want to test every time the price action has touched this line, and you could do that. Or every time the price close has been above the anchored VWAP, I want to know what the return is after 15 candles. That type of thing you could test.
And Dan typed in, I don't know if everyone probably sees the questions, but he's saying you can test any indicator on the screen. You just have to add it to the screen first. My thought about testing it is that it's the art of technical analysis, of the art of knowing where to anchor from. And that's what requires, I think, human interaction. How do I choose the points where to anchor from? How can I don't know how to tell a machine how to look at a chart and say anchor from here and here and there. Maybe that's possible. I think it's a lot more complicated than just right-clicking on the chart and doing some kind of, test this. I could be completely wrong.
Yeah, and to answer the question as well, like you said, it's really where you're going to anchor it from. Everybody's going to have a different anchor based on, subjectivity. One thing that I was going to talk a little bit about, and Brian, if you don't mind, I may just take over right now to do a couple examples of this.
Yeah, we've got all the questions out, so there you go. Go ahead.
Yep. So if you can just disable your screen sharing, I will enable mine. And so to answer Dimitri's question, so you would be able to do this when we do have a scanner, Dimitri. That's something that's on the roadmap. But to move quickly, because I know it's Sunday and everyone's got things to do, watch football, all that good stuff. I did go over the main functions with focusing on proprietary indicators from industry leaders with a great presentation from Brian. What I want to do is integrate the raindrops into how you could possibly anchor these things from. I am by no means an expert in this. I've actually learned everything I know about anchored VWAP from Brian, helping us understand it and going to some of his presentations. But one thing he's always made very clear is it's really where you're going to anchor that VWAP. And before I jump into anchoring from the blue raindrop, I'm just going to give a quick intro to raindrops for those that don't know about them. A raindrop is a volume-weighted average price candle. So it's a VWAP on the candle rather than the open and the close. So you can see you've got a left side and a right side. And you can see here you've got your bar for your average price VWAP for the first half of the period. And then you've got your VWAP for the second half of the period. So you can see here that the function of the color is based on where that VWAP is for the second half of the period. This can be a 10-minute candle. This can be a daily candle. What it's really showing us is how volume is flowing throughout a specific period. So in this case, we can see during the second half of the period, demand started to outpace supply because we can see this volume starting to move to the upside with price hitting new highs that it did not hit in the previous half of the period, whether that's the 10-minute, whatever you're looking at. And so what you can do is you can look at different colored raindrops with these being green, blue, or red. So we just went over the green, which is when the VWAP for the second half of the period is higher than the first. The neutral, or the blue emoji, is when the first half VWAP is equal to the second half VWAP. So this is what we call a true doji, if you will. Bearish raindrop is the opposite of a green when the second half of the period's VWAP is lower than the first, and you can really see that volume flowing down throughout the second half of the period, creating new lows here. So for me, this is really more about where to anchor. I just wanted to give you guys a little bit of a background how these raindrops work. And you'll see here what we have is a couple examples, and I'll go over, let's do United Healthcare first. This is a really cool example. And this is something that I found let's say a month and a half back. And I was really just trying to figure out a way to anchor the VWAP in a little bit of a different way, unique to TrendSpider. And something that's very unique to TrendSpider is the raindrops. And so you can see here what I did is I anchored the VWAP from the first the blue raindrop here, and then the second blue raindrop here. And as you can see, as we went over time, the price action started to respect these two areas very well. So a lot of the time, it's really hard to measure price action or predict where price action is going to go just based on one indicator. Price action is always going to have a margin of error. And so that's why I like to use two of these raindrops, because it gives you kind of a general area of two main, let's say, equilibrium prices that are important. These two blue raindrops show that the equilibrium price for both the first and the second half of the day was equal. And you see that this is a very rare occurrence in the chart. This doesn't happen a lot. So for me, I've noticed that, this is a rare occurrence. So why not anchor the VWAP from this area? So you can see we found support all the way until August. And then finally we broke down And then when we finally broke down and caught a bid here, and this looks more like a dead cat bounce than anything at this point, you can see we bounced right back up to the anchored VWAP from the previous blue raindrop before we broke down. So this is kind of where you can start to capture, quote unquote, the art. I don't want to say this is, I guess this is something new. It's not been done before, especially since raindrops are a newer thing. But this isn't always going to be an end-all be-all, and it's any indicator is never going to be an end-all be-all. But what it is it keeps consistency. So if you know I'm going to anchor the last 3 VWAPs, you're at least following some type of consistent way of doing this. And so that's a way that you may be able to start playing around with this. You may find anchoring from a different raindrop works better. But just because these blue raindrops are so rare, it is a cool place to kind of start doing this from. Another example is Amazon. So we can see here Amazon on the daily raindrop. And this has been the last, let's say, couple months of price action here. And what you'll see is you'll really see the 2 anchors that we've had here that I anchored from, the blue and the blue. This isn't necessarily, the top of the price action or anything like that. I'm literally just anchoring it from the last 2. And you'll see how the price action has really respected this area from the second anchor 1, 2, 3 times. We finally broke through this area, and now the price action the last 2 days of last week is respecting the VWAP from this first anchor up here. So it's a cool example of keeping things consistent, where a lot of people have asked, where are we going to anchor this? And this is a way that you don't really have to guess. If you can see the blue raindrop and you can see the last 2, that may be a place where you can anchor from, and that may be significant. And especially on these bigger stocks where volume is very liquid and there's a lot of liquidity in the market, these blue raindrops seem to have a little more weight. The last example I'm going to do is Netflix, and I'm going to show you guys how you can utilize the alerts when anchoring the VWAP from a specific area. And just pulling this up. You'll see here that I anchored it from the last 3 raindrops here. And you can see we anchored from this blue raindrop. This was kind of price action deviating around the overall kind of what I would call this acting as like a line of best fit, if you will. And then we finally broke through it. And then right before we fell off this ledge, this anchored VWAP did act as decent support here. And then we did have our blue raindrop form after that. But once we anchor from all 3 of these, you can see how the price action respected it here. And I have resistance here, but you can see it. This price action didn't necessarily test this exact area. And this is where the sensitivity is really important. We did just have a blue raindrop here as well, but the price action has been so flat, it's really not going to tell us much. So I wanted to anchor them from these areas instead. And so to capture some of this margin of error, you can right click, create an alert at this line. And this is what Brian was going to mention as well. You can see, let's say that I want to know whenever the price action touches anywhere within this purple area. As I move the sensitivity to the right, you'll see that we're actually capturing more of the price action around this anchored VWAP. And before, when the sensitivity was all the way to the left, none of these prices touched this line. But we added a little sensitivity here, and all of a sudden, these prices are touching this area very nicely. And so naturally, since we have respected this area multiple times on this downtrend, this is where I want to be alerted if we do break to the upside here. So what I can do, I can go to confirmation candle. Let's say that I'm swinging this, but I want an intraday alert in case I want to scale out some or get some maybe more of a position. I can go down to the 10-minute candle. So that means whenever the 10-minute candle closes in this purple area, I'll be alerted. So let's say you wanted your goal was to buy at the trend line support, sell up the first anchored VWAP, or the third anchored blue raindrop VWAP here. You can get an alert immediately through your cell phone or your email whenever that first 10-minute candle closes in this area. So I want to show you guys a quick example of why this sensitivity is important. And we will go to BYND, and I'm actually going to switch to the regular candle here. and you'll see on hollow candles that we kind of tested this kind of weird channel we have here. I'm a big fan of drawing diagonal trend lines. I like to find 2 points, extend them, and this was just an example of how the price action respected this area for, you know, the 3rd or 4th time here. But what's interesting is the price action never got to this trend line. The price action bounced literally right above it, and you can see that here in this specific candle. The wick is at 151.69. The trend line was down at 151.30. So the reason why this is important is because if we would have just had an alert right on this trend line, we would have never been able to possibly buy this dip, and then, you know, it closed way up here almost $3 above where we bottomed out. So it says touch at 5 minutes. So that means whenever the 5-minute candle closed in this area, I received this alert. And if maybe I saw, wow, this is, you know, right at support, maybe I want to do a quick trade here and buy it up to the close, you can see that, you know, there is a decent little doji here after a gap down. So this is really how you can capture that margin of error of price action around these important lines. But instead of, you know, drawing with a pencil, you're essentially drawing with a highlighter here to capture a lot of that margin of error. So that is all I wanted to add. Brian pretty much gave us the expert presentation here. I just wanted to kind of give you guys a secondary view on how you could possibly anchor these specific points. Before we go, I did want to go over a quick roadmap of what we have to come. We do have some new backtesting enhancements coming, as well as the ability to annotate more different ways. So we will be increasing our annotation library. In the 4th quarter of 2019, kind of towards the end of the year, we really want to get our scanner and our watch list alerts out. The ability to do pattern recognition, such as on, you know, more focused patterns. So wedges, channels, kind of the trend lines will already do that for you in a sense, but we're going to kind of take it to the next level and expand our price alerts as well. In the first half of 2020, we're going to be expanding into new markets with international data, even more complex pattern recognition, such as head and shoulders, inverse head and shoulders, cup and handles, that type of thing. More advanced back testing, and then to make this really a fully all-in-one platform, we are going to make it where you can integrate your brokerage data in here and actually trade off of these alerts, off of these, you know, if the price action touches the lower trend line support. This is where you'll actually be able to go in and say, all right, I'm ready to buy, and you can actually make that purchase once you get the alert. That's coming in the second half of 2020. That is really the holy grail of what we want to accomplish, is making the whole process efficient, where you can do your technical analysis, you can have the system help you out, and then you can even be alerted and make the trades without having to necessarily be in front of your computer, in front of your chart. So that's our vision. I want to say thank you, a huge thank you to Brian again. If you guys do have any questions, please feel free to reach out. We do have a free trial, so if you sign up and start to use TrendSpider, you will get your first 7 days for free. But if you do want 20% off, you can use Alpha20 for that coupon. And please make sure to check out alphatrends.net. Brian is always putting out some great content. I know I do. Dan watches a lot of his different videos and his market updates, and we really respect his analysis. And he's one of the main industry leaders, especially for VWAP, anchored VWAP. And we really appreciate you being on today, Brian. Thank you so much.
Thank you.
If anybody has any other questions that we can answer, Dan, do we have any that I missed here? Here. So there's been a couple questions. Let's see. So one was, would you use raindrops to trade SPY? I actually do like to trade raindrops on SPY, but for me, I'm always looking for those blue raindrops, or something where you know, there's something unique within the raindrop. So we do a ton of different videos and webinars on raindrops. So if you guys would like to learn more about those, definitely check out our next webinar, and I'm sure we'll be touching on those a little more. We did want to focus solely on the anchoring of the VWAP on this one. And thank you again so much, Brian. Any last words from you? Oh, I think Brian may have already jumped off. But so, thank you so much for essentially jumping on this this Sunday evening. I know you've got a ton of things to do before the week starts. So everyone have a fantastic night. Thank you for listening in. And if you have any questions at all, please feel free to reach out on social media, or you can reach out hello@trendspider.com. We're happy to help you out there as well. Everyone have a great night, and we will see you soon.